Mr. Jude Chiemeka, the Acting Chief Executive Officer at the Nigerian Exchange Limited, is joining me also physically. So my guest, my virtual guests are joining me gradually. Welcome to the program.
Thank you very
Welcome to
much.
Abuja. So
Thank
nice to
you.
see you.
Same here.
All right, let's get started. And I think my first question is, there will be two. And let's try as much as possible to make it short and sharp. What is driving the rally in the market that we've seen since this year began? The markets ended with a gain of about 40-something% last year. What is driving the rally? That's one. Then number two, how do you think that this current economic condition will impact the markets moving forward?
All right, thank you. And it's always a pleasure to be here. If we step back a bit, last year we had a market that was grossly undervalued, really. If you think about the dividend yield, some of those stocks were posting. And then you had the devaluation that also occurred just by the policy, the bold policy statement from the current administration, harmonization of FX rates, removal of oil subsidy. Those were really huge policy statements that triggered renewed interest because you had a suppressed macro. And so that opened up the market. So a lot of investors had to start reallocating to equity on the back of those good policies. And when you have stocks that are grossly undervalued, obviously, and demand increases, the price will go up, and that's what we saw. And you're right, the market closed last year at 45.9. On the back of that sustained rally, this year we're beginning to also see a further rally triggered also because of the whole devaluation that continues. Repricing of assets. Equities are assets, and I'm sure prices of goods and commodities have gone up, so it's normal, natural for equity assets to also be repriced. And we've seen a bit of strategic trades. And also, we shouldn't take out the low interest rate environment that we saw last year. So investors obviously will be looking to get a better value for their investment. So that's largely what one can attribute to the rally that we have seen in the market so far. Going forward, do we think the current economic environment will impact investors' participation in the market? I think equities market thrives on volatility. So there will be conditions that will allow people to want to exit. But if you think about the purpose, equities market has always been for long-term investors. And long-term investors will always be in the market and they will always get the overall benefit. If you think about the all-share index, average in the last 5 years is returned over 20.3%. And so for a long-term investor, I think it's still a good time to buy for some of the stocks.
Okay. So if we take a look at the active participants in the capital market now, there are about 3 million people. If you just oppose that with the number of people that are young, or the active population, as it were, one would expect that would impact the capital market. What do you propose that can make us increase retail investors' participation in this market?
Yeah, thank you. And I think I must commend what you do, because I think this is one of the ways retail investors can also understand what is going on. Some of them patronize Ponzi schemes. They trade assets that they have no understanding of because people are looking for returns. However, there are certain returns in the market that some of them are not even aware of. And I think that is part of what investor education, financial literacy would do for those retail investors. Last year, the market posted 45.9 average, that's the all-share index return. But there were other products. The exchange is a multi-asset exchange, so we do have other products other than equities that are listed. Our exchange-traded funds, for instance, the NGX ETF that tracks the 30 most capitalized stocks returned over 100%. And so that's a good play. But investors need to be aware of those kind of products. If you think about mutual funds, we have over 20 mutual funds that are listed, and some of those mutual funds that actually helps investors to diversify their portfolio returned as high as 113%. So investors need to be aware of the products. They need to be aware of what is going on in the market to be able to take full advantage of it. I think that in the long run, apart from financial literacy, investor education, there's also the need to create products that resonate with a certain group of people. So we're looking to widen the bracket. We're doing quite a bit. We do have Stocktown, a cartoon, comic book that we have to just educate the younger ones to become financially literate, just understanding the financial market and how it works. We also have a program that is driven by the corporate communication department of our entity that focuses on the NGX X-Lead program, which really is to educate secondary schools working with some financial institutions to create awareness early so that people become financially aware of the products that are in the market. So by and large, products, access to credit is also a key factor because when people understand capital formation and what they can do to take advantage of products in the market, there's also that issue of capability. Do they have the capability to invest? We think about the 51 million people that have BVN. We say that less than 20% of those people have 500,000 naira in their account. So that's also an issue. In other markets, people do have access to credit, so banks can give credit. I know in our market we had issues around margin trading and the rest, but at the time we didn't have a market counterparty. Today we have a market counterparty, NG Clear, and that's really their role to intermediate to ensure the margin calls are made, collaterals are properly monitored, which we didn't see during all that financial bubble that happened the last time. So the market does have mechanism now to be able to administer credit. So it's important for investors to be empowered. The opportunities are there, the products are there, and they should have access to credit to be able to take advantage of all these opportunities.
What will be the role of technology to increase the space? And are there some government policies that might encourage increased participation? You talked about earlier when I was talking about young people, you talk about Ponzi scheme, for example. A lot of those Ponzi schemes thrive on like WhatsApp. People are just sending stuff on WhatsApp and all of that. So you see that you have a lot of digital natives. How is the exchange also taking a look at that in terms of driving education, literacy, and even driving access, you know, through that? Because for people that are watching us now and would like what you're saying, or how can I be part of this market? How do I invest? What are you going to tell them?
Okay, so if you think about what we've done at Exchange, we've invested heavily in technology. Even before COVID, way before COVID, we were looking at the fourth industrial revolution. So heavy investments were made in technology. So today we have trading license holders that have online platforms that will allow investors to participate in our market. Even the way trades are executed today, trading license holders don't need to go to the floor to trade. They can actually execute trades from the comfort of their homes. During COVID lockdown, trades were done. We never lost a day of trading. And so that architecture, the backbone for driving increased retail participation has been built by the exchange. And working in partnership with some telecom companies, we're also creating platforms and avenues for people to be able to have access to the market. So there are different channels today that you can use to reach the exchange. We have our website, which is really interactive and functional. We also have the USSD code, sort code, star 5474 hash. Very easy. Gives you a lot of market data, market information that will really allow you take advantage of the many opportunities that the market portends. But by and large, in the area of partnerships, the exchange is really huge on partnerships because we do realize that sometimes opportunities may not be local. You could also find opportunities outside of the local environment. So how do you gain access to that? So we're part of the African Exchange Linkage Project, which is really an integration of African markets, and it gives you the ability to trade into Ghana in a seamless fashion. You can trade into Kenya, Botswana.
While here in Nigeria?
Yeah, while you're in Nigeria. I mean, it's a very seamless backbone that has been built, sponsored by African Development Bank.
Okay.
And it allows investors to trade seamlessly. So you can trade into Casablanca, you can trade into South Africa. So research is a key factor. So trading license holders also provide research, market insights that will allow investors see the opportunities in these countries and be able to take advantage just what sort of returns they are looking at and sort of portfolio they want to build, and they can do that from the comfort of their homes using technology. Technology does play a key role. We recognize that. I've made that heavy investment. So it's now up to the retail investors to take advantage of all these online platforms and the many channels that they can utilize to reach the exchange. I must say that it's better to invest in a SEC-regulated investment, because that way the regulators themselves are sure that the market operators are regulated and they're not doing anything. You can't just wake up one morning and they disappear with your money. Okay. So it's very important to bear that in mind.
Okay, now you mentioned SEC. What came to my mind is that in SEC's Capital Master Plan, they have a target of getting retail investors participation to 5 million by 2025. How are you working towards that target? The other question is around, you mentioned earlier margin trading, and I remember in the year 2008, 2008, you're smiling because you know why you're smiling. You know, we're all there back then. A lot happened. A lot of people got their hands burnt, and people are still, some people haven't healed. How is the exchange building trust to be able to get those categories of investors back? Then the other thing is that how do we even build up education? Last week, we were in a meeting, and a colleague just told me, that he's invested in some shares over 6-7 years ago. He has not even received one dividend from any of the company. And I was like, really? And that you can. And I and my other colleague opened, in fact, on his phone, we were able to show him the status of his shares, of course, through the e-dividend stuff like that. So if someone like that does not even understand, and this is someone that is, you know, you understand what I mean. Of course, not all educated people are even financial literates, as it were. So how do we build that up?
All right. So really, from the master plan, the capital market master plan, it's a 5 million target. If you think about the universe of investors that have utilized our markets, we'll be talking about 3 to 4 million. Active participation is less than 1 million. I think that's really where the real work needs to be done. And one of the ways of doing that is financial literacy, investor education, partnerships, creating access to market, using technology to drive participation, which is what the exchange is really doing. The other one is really around how do you scale up products that resonate with certain group of people? Some people are not really interested in the plain vanilla equities, fixed income, bonds, or ETPs or ETFs. So the millennials and Gen Zs, for instance, the average age in the market today is about 50, right? So how do you bring millennials? So you have to create products, right, that resonates with them. And that's really where the exchange is working. We're creating a whole plethora of products that will resonate with that group. For instance, digital assets, tokenization of assets, creating Nigerian depository receipts. These are dollar receipts that you can invest in Naira, but it has exposure to dollar investments offshore. So you can actually use it to mitigate this FX volatility that we're seeing in the market. So we're really working to create products that can widen the bracket, but more importantly, a form of calculated, constant investor education is really key for people to understand what is even available. We find that a lot of people are not aware of these opportunities, which is why this program is very good for people to understand that there are investment products in the market that can deliver the sort of returns that they are looking for. For instance, the new gold ETF a while back returned over 250% in terms of returns to the investors. And there are other assets like that will give you the sort of return that you need in the market to get your return metrics in place.
Very quickly, building trust. Seconds.
Trust is really earned.
Trust is earned.
Trust is earned. It's a matter of time, but we do believe that with a well-regulated market, SEC is very on top of it. We do have a demutualized exchange, so we have an NGX regulation that is on top of regulation. So with a proper regulated market, the operators will always behave the right way.
Have you earned that trust back since 2008?
I believe we have, because we have created a structure. We have NGC clearing now that is responsible for margin and collateral management. We've also created derivatives, so we have NGX index futures. We're looking to launch a single stock futures. These are instruments that will help de-risk the sort of volatility that we saw in the market last time.
All right. Thank you very much. I wish we had more time, you know. Thank you very much for coming.
You're welcome.
Of course, we'll host you again. All right, I've been speaking with Mr. Jude Chiemeka, who is the Acting Chief Executive Officer at the Nigerian Exchange Limited. We've been looking at increasing retail investors' participation in the Nigerian capital market. So take advantage.